I guess it would help if I turn my mic on. What's going on, everybody? Welcome back to Venator Trading. 10k to 2 million max allocation using bespoke funding. So glad you guys are with us today. It is Monday, May the 15th, 7 a.m. Eastern Standard Time. And I hope you all had a great weekend. Happy Mother's Day to all the trading mamas out there. None of us would be here, not one of us, without our mamas. So, shout out to the moms. Thank you guys for being with us today. Venator Trading. So we're taking a 10k account that cost $100. Actually, it was like $119 with Bespoke. They're currently running I think 25% off discount on that 10k account. So if you want to jump in with us and follow along and ride this train all the way to the top with me, then go get one of those accounts. I don't have a link. I should. I could make some commission off of that, but I am currently not doing that. I'm just trying to show how this can be done. Prop firms, man, they have changed the industry. And now traders that have never had access to capital and have been stuck trying to fund $100 or $500 or maybe $1,000 accounts now have the opportunity to get funding with a large amount of capital and completely change their life. And I don't know why anyone that is a serious trader isn't trying to get max funded. Like, that should be your goal from now on, is to get max funded with any prop firm. Now, some of them have lower max allocations than others, and you need to go kind of do your own research on those. I chose Bespoke Funding. They're a new prop firm. Number one, they're new, so I wanted to try them out. Number two, their prices were kind of in the middle of the pack. And number three, they have $2 million in max allocation. So you can buy any number of accounts that add up to 2 million in funds, and you can trade $2 million in capital with Bespoke. So that's what we're doing. That's our goal. And yeah, we just started last week, so this is day 4, I believe. Some of the rules, just for anybody new that's watching or will watch this later. So for my trading system for this specific account, I do not use this trading system on all of my challenges or funded accounts. But I'm doing that specifically for this one because has I don't know, I just think it's going to help new traders. So I use, I don't know if you want to call them smart money concepts. I guess you can. I hate that term because it has so much baggage in the industry right now. But I trade basically order blocks, imbalances, and breaker blocks. So those are the setups that I'm looking for. And when I'm trading, when I spot a setup, I'm going to take it. Now, my max loss, daily loss for my system is 2%. Now on Bespoke, it's 5%. You can lose 5% in one day. Don't do that. That's dumb. That's stupid. You should never get close to that. So my system's personal daily loss limit is 2%. So I can divide that 2% over multiple trades. If I see setups on multiple pairs that I'm following and I want to spread that out, I can. But otherwise, I'm just probably going to find the best setup and risk 2% on one setup. If I lose that trade, I'm done for the day. I walk away. If I win that setup, great. So I know based on my data that with this system, I have about a 50% win rate. And that's beautiful because I have a 1-to-2 risk reward ratio set for this system. So that's what I'm going for, 1-to-2. I'm not trying to capture huge home runs, grand slams. I'm just trying to get 1-to-2. And with a 50% win rate, I'll be able to pass this challenge risking 2%. What are the dangers? The dangers are because I'm risking 2%. I only have, if I lose 4 trades in a row, I'm done. From what I know of my system, that's highly unlikely to happen, but it can, and it might, and that's okay because it's a 10K account. And if there's people out there that are starting to get into funding and they have, let's say they've saved up $800 or $1,000 to trade with. Well, instead of putting all that $1,000 into an account and watching that slowly fade away, you could buy $10,000 challenges. And some prop firms are even cheaper, so you could get more than that. But you have 10 bullets to shoot, 10 challenges to take. And one challenge passed and funded will more than make up for the other ones. So I'm trading a little bit more aggressively on the percentage risk side to do this challenge because it's a 10K challenge, and I know that eventually I want to get to max funding. So I probably wouldn't do this if this was like a 400K account and I had a larger investment in it, but I don't. So I'm willing to take a little bit more risk. I also know my system. I know my win rate is around 50%, and at 1 to 2 we'll be fine. So currently we don't have any wins on our belt. We have taken 2 trades in 3 days. We have 1 loss and 1 break even. I was really, really bummed last week on Friday. Just a great day of analysis and entry and execution. But my rules say that when price reaches 1.5 R in my favor, then I move to break even. And so we got into a GBPUSD trade last week on Friday morning, and dadgummit, that thing tanked just like we thought. It was a short, and it hit 1.5. We moved to break even. The next 15-minute candle flew back up. Of course, tagged our break even that was slightly in profit to cover commissions and spreads and whatnot, and then immediately dropped back down to our take profit. And that's the way trading goes. Sometimes you don't know. Every outcome is completely random. You don't know. So you just follow your rules and you trade your system, and there's really no emotion involved. It's just executing the plan that you have. That's it. You just execute it over and over and over again. And that's why I call this Venator trading. Venator is Latin for hunt. It's hunter. And that's what we're doing. We're hunting trades. We are looking for the best prime setups that we can find to capitalize on. We are not walking into the woods with a machine gun and just spraying the woods and hoping we kill some animals and get that trophy buck. You're not going to get the trophy buck that way. I mean, maybe you might, but the chances are extremely slim. So we want the trophy buck. We want to take him down. Then we go and we stalk and we hunt and we look for clues, and we're patient and we're quiet and we just sit around and wait. And then when that trophy buck shows up, we are in a position to capitalize on it, and we haven't wasted all of our ammo shooting at every twig that cracks and every leaf that rustles and every wind that blows. And so we're hunting. We're Venators. We are trading. So, all right. That's a little bit about the intro. Hope you had a good weekend. Big weekend for me. Birthday on Saturday. So that was fun. I've always gotten to share my birthday right around Mother's Day. A lot of times it's actually happened on Mother's Day, depending on when the calendar falls. But yeah, here we are, another start of another year, and I'm ready to get after it. So I'm just going to go back looking through our charts here for a minute, and we're going to check out kind of what happened last week. This was the big move that I outlined on the live stream last week, and this was our first target area, second and third target areas, and we knew if this was going to hold, this was going to go up. It played around with it, had some rejection. This is the dollar, DXY. Dollar is very important because I look at the main instruments that I'm following are Euro, pound dollar, and US30. And so dollar correlation is extremely important when you're looking at making sure you're getting in on the right side of the market. And you can find some divergence often if dollar makes new highs and euro does not make new lows, then you can often capitalize on some big moves. And so this was the dollar index. If you look at the daily chart, you can see we've just been in this massive, nasty consolidation mess. I've been bearish for quite a while, and even in most of this, I've been bearish, mostly because we have relative equal lows. We have this red box as a monthly imbalance, and then you've got relative equal lows here, and then you've got all these relative equal lows right here, and we've engineered liquidity. We've engineered liquidity on both sides. I was leaning more towards price coming down and grabbing this sell side liquidity here, dig into this monthly imbalance a little bit more before we get a retrace back up. However, the last couple days at the end of last week, we had a big bull rally on the dollar. So as we went into Friday, I was expecting price as it gapped up open to fill in that small little gap and then rally up into some of this buy side liquidity on the top side. So what we're looking at right now, or at least as I see it, is probably opening today, and you're going to get some kind of retrace. I mean, you're looking at, and you can already see the dollars coming back down into the range to fill in some of this massive move up over Thursday and Friday last week. You know, where could it come? I mean, these imbalances are huge. The first stop would be this old buy side liquidity here, which is these two big bearish candles, which could be just a function as a large order block. And so maybe somewhere into here, you could see the dollar fall. It doesn't have to come all the way back down here. If the dollar is going to stay extremely bullish, it could just leave a big imbalance right here and run back up. This candle, this yellow box, orange box that you see right up here is a weekly imbalance. Left behind, the low of this candle, the high of this candle do not overlap. That leaves behind a imbalance right here that price is likely to want to gravitate towards at some point. And you can see last week it just wiped out 1, 2, 3. The last 3 weeks, it just took all of that out. And so you can see that if it wants to come back down into this wick, that's the first area we would be looking for price at the dollar to potentially stall out on. Doesn't mean it will, because on the daily, you've got a couple big imbalances down there still left to fill. So, but it could rally back up. And our first point of interest would probably be this weekly zone right up here, where we would look to see if the dollar wants to fall off. All right, so that's our kind of initial dollar take. So far, it's opened and it's been pushing back down overnight through London. And you can see again, big imbalances here. This is the top of that big wick from the week, and what we were targeting as long-term. This was, you can see all the liquidity that would be resting up here, and it just ran up and grabbed it. So now we're gonna come and see where would it fall. You've got a 4-hour order block right here that if it could come down and get past that wick test here, you could see it potentially pull back into this 4-hour zone here, fill in this large imbalance right there, and then start trying to climb higher up into that weekly imbalance above us. You still have all of this sell side liquidity down here. Was this just a run? Was this just to clear out some stops above all of this engineered liquidity up here, so that we can now make a bigger, deeper run into these relative equal lows and this monthly imbalance? Could be. We won't really know until we get a little bit more structure developed over the course of this week what it wants to do. If we maintain this bullish market structure and bullish order flow, then the PD arrays should be respected. Bullish PD arrays, which means order blocks should be respective. Imbalances should not be violated. And if they are, then our attention would switch and our bias would potentially switch to the downside. So that's kind of where we're at with dollar right now. Let's jump over to the pound. So we've got this. This was our trade last week that on Friday I was so frustrated with. Right here. We had been just analyzing this all morning, and we finally get a break of structure. It leaves an imbalance. This is the ICT 2022 mentorship model right here. We waited for price to come back up into a premium of this move using this break of structure right here. And so this is our leg down, waited for price to come back up to 50% higher of that leg. Used the imbalance, used the high of the highest fair value gap that we could get as our stop and protected. We got in and price dropped hard, and it came all the way down. This is 1 to 2.2, and we do 2.2 because it covers commissions and spreads. It's a little bit more than 1 to 2, but in the end, it's a true, it's a net 1 to 2, not a gross 1 to 2. So that's why it's there. But man, I was so bummed because I was really hoping to get that 1 to 2 and finish our first unofficial trading week in profit, but we didn't get it. We moved to break even right here, and then price just comes up, wicks us out, and then over the next 30 minutes just slams against our take profit, and it went even further. Obviously, if you were part of that. So right now what you see on my screen, let's go back up here to the 4 hour. This is a trade that I'm demoing. I do Sunday night analysis on my own, and I'm just watching, and I was like, man, got this big 4 hour imbalance. I'd like to see how price reacts up here. Looks like it's not going to respect it and try to make a run on Friday's high, potentially. You can see it's just opened and then taken out every gain from Friday. It's leaving behind these relative equal lows down here. So again, this is engineered liquidity, and then this trend line right here that retail sees has been rated from Friday's situation. We had this retail, so CPI was up here. I think that was last Wednesday, I believe. But price ran up, grabbed into our weekly imbalance up here. I mean, just took out the high and then just dropped hard, grabbing all of this engineered liquidity here on the sell side, filling in this imbalance. Thought we were gonna, it made a pretty aggressive run towards those relative equal lows on Friday, didn't get them, and now we're pulling back pretty aggressively here as we start Monday to try to recover some of that. There's a lot of stuff going on fundamentally in the markets right now, just with the debt ceiling talk that's going on, inflation, CPI, PPI, all the stuff that's happening, unemployment, and it's just creating some volatility. It's creating these nasty ranges where price is just consolidating until it gets some bit of news to kick it out and start running at liquidity. And so it's just engineering liquidity, and then it makes runs and grabs it, and then it starts engineering more liquidity. So if you can figure out where the liquidity is, and you can figure out where price is likely wanting to reach to and grab liquidity, then you're probably going to be able to identify some pretty good setups. So I don't know that we're going to take a trade today. I'm going to be here probably till about maybe a little before 9 a.m. Eastern. I'm in Texas, so it's 6:20 here right now. So I'll be here till about maybe around 8 o'clock, another hour and a half or so. And we'll just watch and see how price plays out. I don't think we have any news this morning. No, I don't see any news here for the rest of the day. So we'll just watch and wait and see how the market is going to play. The reason I don't take a lot of trades on Mondays typically, mostly because I just want to see what are the clues that the market is leaving behind. There's a big buck out there walking through the woods, and I want to take him down. I want to, I want to be in a position to find him. I'm not walking into the woods and within the first on Monday, the first day, just taking a shot. That doesn't mean I won't. If he shows his head, I'm gonna take him. But if he doesn't, then we're great. We still have the rest of the week to trade. And again, I'm just looking for 1 to 2. I'm looking for a high probability outcome, and so because of that, I'm just gonna watch and wait. So we might take a trade today, we might not. I'm just gonna tape read and talk through some how I see what the market is doing, and also talk through some psychology that I think some traders just deal with as they sit here and they watch and they wait, and what they would be thinking. So with that being said, that was our pound dollar. So we're rechased back up. We've now come into this 4-hour order block right here. You would expect price, if price is going to remain bearish, it's going to respect bearish order flow. And that means order blocks are going to be respected. We're pulling back up into this wick right now. If price is going to reverse, where might it reverse? Probably this order block somewhere in here. Is it this body? Is it going to come all the way up to the body? Is it going to come up to 50% of the wick? It obviously is not the bottom of that wick. It's already blown right through there. So if you drop down to our lower time frame, you're at an hourly order block here. You have relative equal highs, and anybody that was short on Friday, where are their stops? Right here. They're right here. So price could be, if it's going to want to stay bearish and make a run for these relative equal lows down here, price likely could come up on, make a run up into here in New York and then fall off. You've got these hourly order blocks above it as well, but you don't really have, you can see this big drop and then just a quick reversal since we've opened Sunday night, and then all of London has just been running high. We can take this off. That was just a demo idea. This is last week's trade. We can take that off. Don't need to worry myself with that anymore. So we're just going to watch. The dollar is showing some weakness as we start the market. As we come into the market, you could see right here, there's a small fair value gap that we have yet to fill. Relative equal highs here. So potentially, make a run into those relative equal highs, fill in that fair value gap, and then roll over. This would also be an OTE entry from that leg down. We're in that zone right now. So if price rolls over right here, maybe grabs up into that and then rolls over, then that could be, if you're bearish, that's what you would be looking for. But you want to see price, it's just had a straight run down and a straight run up. And so oftentimes that's a signal for a stop hunt, right? That's, we aggressively ran down and then we've aggressively run back up. This could be the telltale sign of a stop hunt. I'm not saying it was, I'm not saying it is, I'm not saying this thing's going to run higher. You've got this trend line here that retail's looking at. It's like, oh, you know, if they've got moving averages on their chart or whatever, where are they? They're all right in here following this trend down. And as soon as they get violated, if they think that's going to act as support or resistance, rather in this case resistance, they think that this thing could roll over. And really this was just an engineered liquidity of all of this area right here, and you've seen 2 days of grabbing liquidity, leaving some still down here in these relative equal lows, coming super close. So I think we get another dig into here. That's kind of how that's my initial bias, is I'm still short because bearish order flow has been respected so far. We'll find out today how this actually plays out. Is it going to respect this higher time frame order block right here we've just pulled back up into? Don't know. If you're going to be bullish, what would you be looking for in the New York session? You would be looking for a pullback into some of this London leg that was made, and you know, if you take it from the low, it's there. If you take it just from London, the London session was right here. It broke above. We had a break of structure on the hourly right here. Let me pull this up to right there. So you might be looking for a pullback in the New York into a discount right here somewhere. And you'd be looking, I don't see any good PD arrays on the hourly time frame. No imbalances that I would be interested in. On the 30-minute, you have this 30-minute order block right here. You have an imbalance right here that it's dug into twice and respected. You can see price rejecting off of this 30-minute order block right here right now. And respecting that order block. But if price is going to continue, if let's just say you're bullish and you think pound's going to go up, where would you be looking to enter? You don't want to buy at a premium. And where's price right now? It's at a premium compared to the leg that we just have made overnight and Sunday from the weekend. So you want to buy at a discount. You want to buy when price is cheap. So you're going to be looking for price to come back down into this, at this order block at least, but maybe into this OTE area, respect this 30-minute candle, and then continue higher. But if you look at the higher time frame, what's happened? Why I am leaning more to the downside. You've had this run up, you stabbed into this weekly imbalance, taking out buy side liquidity, and so you had accumulation, you've had some manipulation, and now you've had distribution. Power 3. It's taken out all this. We've respected this imbalance. Okay, we respected this bullish order flow. We broke structure. Price came back up into that order block and rejected off of it. We've broken structure. Price came back up into this imbalance and respected it. We've broken structure. Price has now come back up into this imbalance in this order block. And so I'm bearish. I'm going to be a little bit more bearish short term. I'm not saying like for the next month or two. I'm just saying right now, prices is creating bearish order flow and it's respecting PD arrays. Bearish PD arrays, and so that's what we're looking at. We're going to think price is going to hit that order block and then run back down. Let's go to the euro dollar. Euro dollar. This was what we outlined last week. These were all of our downside objectives, and it just crushed all of them. And so now it's like, are any of these going to turn around and become inverted fair value gaps? Meaning we were expecting price to fill them in, and once a fair value gap is violated and traded through, it can become an inverted fair value gap, meaning as price comes back to it, you want to see if price is going to then use that as resistance or support and actually trade away from it after it has violated it. So you could see broke through both of these, excuse me. Let's use this one as one rejection. This one has been traded all the way down through and now traded all the way back up. So I'm less interested in it right now. But these two, I'm still going to leave on and just watch. So what am I seeing? Again, if we go up to the daily time frame, higher time frame is where you always want to start. You've been in some consolidation. I thought we were going to make a run up into this volume imbalance from, is this a monthly volume imbalance? No, weekly. Yeah, weekly volume imbalance. You can see right here from the close of this candle to the open of the next candle on the weekly. Massive drop. We've wicked up into it, but you want to see bodies traded through eventually. And so I thought we were going to get up there last week. We didn't with CPI. Instead, the engineered liquidity, it's reached down and grabbed into and pulled it. So it's you can see we've had a gap up This was Friday's close. This is Monday's open. And that's quite a gap of like a 15 pip gap up. And you can see it's retracing now. The last two, Thursday and Friday, big down candles. You could expect today to be probably an inside day, likely reach up, retest these fair value gaps and maybe this wick here from Thursday and close out that. Or leave it open. Tuesday, we get the high of the week that closes in that imbalance and to go lower. That's kind of what I'm looking for. But again, we're just going to watch and wait and see, does price respect PD arrays? 4-hour time frame, you can see we're making lower lows and lower highs. Price is respecting bearish order flow. This 4-hour order block right here with some imbalances up here would move price back into a premium, which would allow you then to sell high and target some of these lows down here. So currently what we're watching, it's about to fill in, may have filled in this imbalance already from last week. This would be your target zone. Ooh. So that's kind of what we're watching and waiting. London's just been moving up. On the 1-hour time frame, you can see we've got some volume imbalances up in this area. The price is probably going to want to get into. Currently respecting this 1-hour order block right here. It's filled in this imbalance. It's respected this imbalance here that was traded through and is now turned around. This inverted fair value gap is now acting as some resistance. I think it's going to trade through there. I think it's going to want to come up into here a little bit. But so far, it's respect on the lower time frame. It's bullish. It's respecting the bullish order flow. And so you've got, this is a bullish order block. This down candle came back in, filled in an imbalance, hit that order block, came up, came back down into that order block again, respected it, rejected it, and now it is trying to make a higher high. And if it closes above this down close candle, it will create a new 1-hour order block, and you would want to see, if you're going to stay bullish, want to see price respect that that order block if it turns into one. It's not one right now. Okay. So we're just watching and waiting. We're going to just kind of tape read here and talk through. There are no setups there. I'm not expecting a setup. If I see a beautiful setup, I will take it, but I am mostly on Mondays just watching and tape reading and seeing what the market wants to do after the weekend. US30. US30 was my favorite trade I called last week. I wish I would have taken this trade on my 10K account for this challenge. I did take it on two other, a funded account and 2 challenge accounts. So beauty. So good. We talked this all the way through, and we got off right here as price was coming down into this area and taking out these lows. That's when we stopped the live stream, but you can see I said price was going to reach down for the old daily low. It ended up doing that. It's now retraced back up. I'm still bearish indices. Dollar's going to remain. If the dollar's going to remain on the bullish side, then you would expect that to be a risk off scenario as people are going to the security of the dollar. But there's so much influx right now, just again in the news, that it's hard to really get a firm grasp. But you're just watching the charts, you're watching price deliver and book, and you're trying to get in line with the flow of the market. You're not trying to fight the market. You're not trying to, it's like trying to fight the ocean. Just get in the stream, find a wave, ride it, let the wave take you where it wants to go. Don't try and make your own wave. Don't try and see a wave that's not there. All right. So on the 4-hour time frame, you can see we took out that low, and then after taking out the previous day low, we've reversed. We're about to take out the previous day high. is in sight, last Friday's high. I don't know if we'll get there. On the weekly chart, you can see just consolidation. We grab some liquidity, we back into the range. I'm bearish overall. I think this is going to go down. And for the weekly, now that we've mostly filled in this imbalance right here, you get a pullback, and there's no imbalance to fill in, so it's just going to be looking and waiting, and it's just sitting in here. We got an inside candle for the week right here last week. Maybe we come up. I don't think we're going to take out last week's high. We might. I think we're going to get up into take out Friday's high, maybe Thursday, and then you're going to see a rollover again. So you've made a higher high, a lower low, a lower high. So you've taken out liquidity here. You've taken out liquidity here. So where's it wanting to go next? Hard to say because it's trading back into that range from last week. But my gut says down. I'm bearish. It's what I'm going to stick with until price tells me otherwise. And so if price takes out Friday's high, I would be looking for some kind of a reversal. If it doesn't get there today, if it fills in the rest of this fair value gap, this right here, this little up close candle, it would kind of be my, if it violates that, closes above, then I would maybe look to see these buy side liquidity targets up here. You got some imbalances, relative equal highs, all right here. So there is some buy side liquidity on the 4 hour above you that it could be wanting to reach for if we're wanting to go lower. Short term, seeing this imbalance get completely filled in and this order block be respected could be what we reach for today or tomorrow as the high of the week, and then it rolls over and then starts aiming for more liquidity back up, down under on the downside. So we're just watching and waiting. No trades taken. We're just doing analysis right now. If you are following along, and I would appreciate the subscribe and hitting the like. I imagine this is going to take a while to pick up some steam until there's some proof of concept here of actually getting funded. Ain't nobody really care about anybody trading a 10K account on YouTube Live, and I get it. But how many people will care about it when it's a max allocated $2 million account, taking the same trades, doing the same analysis? I think I sent a tweet out yesterday that said percentage over profit and loss. When you're starting out trading, you can set up on your MT4 to monitor the trade position on profit. You can do it by tick. You can do it by percentage. I highly recommend you do percentage. Don't worry about what the dollar numbers are. These are all demo accounts. You're just trying to get used to taking high probability setups, and you're going to get used to watching your percentage go up and down. That's what you want to focus on, the percentage growth, because it's the same thing whether you're trading a $1,000 account, a $10,000 account, $1 million account, a $2 million account. It doesn't matter. You're taking the same trades. If you can focus on growing percentages and seeing your percentages go up and down, the dollars are going to take care of itself. You're going to get paid, and you're going to get paid a freaking lot of money, but you don't need to worry about that. Just focus on the percentage growth, percentage over profit. Focus on growing your account a percentage at a time, or 2 percentages at a time. That's all you need to worry about. Don't worry about the dollars. The dollars start messing with your head, and they make you emotional, and you're not ready psychologically to deal with that. If you're not used to seeing those numbers go up and down like that, and you see, let's say we pass a 10K account, right? And we get funded with Bespoke, and we get our first, let's say we can make 4 or 5%. That's like $400 or $500. And with the profit split, you're making $300 or $400 plus your refund. Now you take that and you go and buy a 50K account or a 100K account. I don't know what their prices are, but you buy Whatever the amount that you have gotten funded with, you buy the next largest account that you can. Now, instead of, and now you've gone from a 10K, and let's say you can buy a 50K, you've 5x'd your potential. 5x'd. So instead of making on 4 or 5%, instead of making $300 or $400, now you're making $1,500 or $2,000. Okay, so you can see this is going to snowball quickly after you're funded. My point is when you're trading a $400,000 account, which I think is their largest single account that you can purchase, a 400K, and you make 5% on a 400K account, that's $20,000. You're not used to seeing those numbers go up and down when you're trading. 1% is $4,000. 1% on a 400K account. And if you risk 2%, you're risking $8,000. $8,000 is that's like 2 months' salary for a lot of people. Maybe more, depending on where you're at in life. It's a lot of money, $8,000 that you're risking on one trade. And if you lose it, the what it does to your mindset when you start thinking about and dwelling on $8,000, it ruins you. It absolutely ruins people. It's a punch in the gut that is hard to recover from when you're first starting out thinking about that. When you win, it's also bad because now you're like, I just made I made $16,000, 1 to 2. That's our risk reward ratio, 1 to 2. I'm risking 8, I make 16. $16,000 in one trade on a 15-minute time frame that takes an hour and a half to play out. Now, you sat here for maybe 3 days watching and waiting for that perfect setup, but when actual execution time comes in, it's $16,000. And you're not ready to deal with that. But you can deal with a 1% gain, 2% gain, 1% loss, and so on. And that's not going to affect you. So change your MT4, monitor off of percentage gained and lost. It will help you mentally and emotionally and psychologically, which is the biggest hurdle in this whole career, this whole business is in between your ears. It's your head. That's the biggest stumbling block traders run into, is what's going on up here. All right, sorry, this little rant. Trade percentages, focus on percentage growth. Anyway, this was a beautiful trade. I'm so glad that we got into that. I don't think anybody was watching live. I did tweet it out, and I know people saw it, said thanks, good call, whatever. But it's just nice to see your patience and analysis in trading pay off, and that was a great move. I'm so glad we got into that. US30. So I'm in a competition account on, is it My Funded FX? I think it's My Funded FX. I'm doing their May competition. So most of these prop firms all have free competition challenges. Like at the beginning of the month, they just give everybody demo accounts and a $100,000 demo account. And whoever can make the most percentage gain over the course of the month, at the end of the month, they hand out free challenges and some cash, some of these places. So in my May challenge account for Bespoke, for My Funded FX, I use this this move here. I think it's up to like 18% or something on that account without violating any of their rules. I highly recommend using those challenges because it's always nice to have an account that you can go into when you're just feeling you've got an itchy trigger finger and you want to see, you have this gut feeling or intuition or whatever you think it is, and you're mad because you lost a trade and you're on tilt and you need to get back in. You can pull up these demo challenge accounts for all these prop firms, and you can degen trade on there as much as you want. And highly recommend getting those competition accounts because it's just fun. You can just throw on, I think like the one I'm on right now has a max lot size of 5. You can just throw 5 on, you don't even care. You're not even putting a stop loss in. It's not necessarily great for overall trading ability, but sometimes you need to just shoot a gun. Sometimes you just need to feel it fire. And if the market's slow and you're not like seeing a high probability setup that you want to actually take a serious, legitimate, professional trade on, you have these competition accounts. You can pull it up, throw on a 5 lot, which is the max lot size they have, and in the direction that you think it's going to go, and then watch it play out or not. And then it doesn't affect your challenges. It doesn't affect your funded accounts. It's just monopoly money that if you hit a home run on it, you could find yourselves at the top of the leaderboard, and at the end of the month, potentially get a massive challenge free, or some cash or something, or another 10K account or whatever. So use those. I think almost all of the big prop firms now are using these monthly competitions that are just completely free. You can just go in, follow their rules, and the chances of you winning them are extremely low, because degen traders go in there and someone's going to get lucky within the first week and hit a 5 lot on a US30 for the first couple weeks, get the direction right, and be up 60, 70, 80% on their account. You can't do anything about that. But it's really not about trying to win those as much as it is, for me anyway, it's more about just trying to have an account that you can go to just play with and not worry about following any set rules. Take those degen trades when you're on tilt. You're tired of hitting a losing streak and you just got to take some revenge out on the market. You can use those accounts to do that and still protect the accounts you've actually paid money for or that you're funded on. All right, US30. Again, this was the area that we said this box here is kind of our line in the sand. I'm going to take this stuff off from last week. I don't like to dwell on all that stuff. I want a clean chart. I don't want to be influenced by anything else that's going on that I used to see. I want to see what I see as we go. And so you've got Friday's high here, Thursday's high up here, and you've got this 4-hour order block is kind of our line in the sand to completely fill in this large imbalance here. So I'd be looking for price to come back up. I'm not saying it will. I'm just saying I want to see price respect it. If it comes any higher and I want to stay bearish, I want to see price respect that. So that's what we're looking for. I'm going to check a group chat real quick that I'm in. Been dinging on me, and I want to make sure that I'm not getting messaged or anything. So bear with me real quick. I'm going to jump over to Telegram into this group chat, see what's going on. All right, nothing happening over there. Just people chatting. It's Monday. Again, Mondays often are slow. Tuesdays, Wednesdays are often the days that you get the high or the low of the week, and so I'm just gonna kind of wait and see what's happening here. The US30, let's see, we're coming into, it's got about 45 minutes or so, 40 minutes to the market open for US30. So I imagine it's just going to kind of stagger around here for a little bit. Let's go see what Euro's doing. Let's go look at the dollar. Dollar's still dropping from our overnight. It's filling in this imbalance. It's approaching the old buy side liquidity. This is the I think a weekly wick. Yeah, weekly wick right here. You can see right here, massive bullish candle. You're going to expect some kind of retracement. At the bare minimum, you're going to see it come down and fill in that wick, I think, and not leave an imbalance here if it wants to go higher. Remember, if you're looking at open high, low close, and you're trying to anticipate what the next weekly candle is going to look like. Candles open, they give you, if you're expecting it to be bullish, then you're going to see price open, give you a low, and then create the high, and then close higher than the open. Okay, so if you're expecting the dollar to be bullish again this week, you're expecting price to open, put in a low at the beginning of the week, sometime Monday, Tuesday, maybe Wednesday, and then you're expecting price to rally and give you a high of the week and then close, creating a bullish candle. So right now we're expecting price on Monday. I got to sneeze, excuse me. Let me mute this. Okay, maybe not. Thought it was coming. You're expecting price to put in a wick, and that's what it's doing right now. You can see it has put in a little bit of a top wick, but I would expect price to, if it's going to be bullish this week, it's going to want to come down today, tomorrow, potentially, before it reverses and starts putting in a larger top. So I would expect price to come down into there. You can see you've got an imbalance under here from this is Friday, this is Thursday, this is Wednesday. So the Wednesday high and the Friday low have created a daily imbalance down here. You have a volume imbalance right here from Thursday to Friday. So there are some there's a volume imbalance here that price traded through, came back and respected. It may want to get back down into some of this either today or tomorrow, put in a low before it moves any higher. I'm not about to try to decipher all of the socioeconomic events, the debt ceiling talks, and what's going on with Congress and whether they're going to raise the debt ceiling or are we going to default, what that would do to the dollar, what that would do to the indices. I don't think it would be good for any of all of that. If they do default and they don't raise the debt ceiling. It happened last time in 2008, and 2008 was really, really bad economically, just for a lot of stuff. I don't really care whether the market goes up or down. I don't really care long term if it causes recession, if it what it does. I'm just interested in reading price, looking for where liquidity draws on liquidity are, and then trading, seeing price respect order flow, like bearish or bullish, and find high probability setups in line with the trend in my daily bias, in my weekly bias. So dollar is just coming on down, and people are like, oh, the dollar is bearish. It's not. You can see it's respecting bullish order flow. We've had a break of structure. We have a fair value gap. So I would expect price to respect somewhere in this fair value gap and all the way down to this order block right here. It can come all the way down that far. And I'm not going to short that because I don't know. I don't know if it's going to be bullish, and it can respect any of these. It could turn around right now. It's inside this fair value gap. It's almost at this old wick level. And it can turn around. There's no wick on this 4-hour candle right here. Very often, no wick candles like to get tested. And so this order block and this no wick make me think it could come down this low. I don't really want to see it close back below here. This 1 hour area inverted fair value gap over and over has been respected, liquidity grab, stop hunt, respected. Is this another liquidity grab, stop hunt? If it closes back aggressively below here, I would probably anticipate more bearishness. This is kind of your line in the sand for bullish order flow if it violates that. Or yeah, I would just say I'm going to be short-term bullish on the dollar as long as we don't violate this order block right here. Wish I could tag this right now on Monday, because on Friday I'd like to come back and see how accurate this all is. Okay, here we coming into the 8 o'clock hour for New York here in just a few minutes. We can see, whoops, don't do that. We can see we've had a break of structure. There were no fair value gaps here. We've created an order block. Price is respecting this order block on the dollar, which would mean short-term bearishness coming back down into this 1 hour order block here, this imbalance. There's another imbalance down here in a larger, this is where that 4 hour order block is that I notated earlier on the higher time frame. So prices looks like it's rejecting off of this 1 hour order block. It's leaving, we've had a break of structure. We're leaving behind an imbalance. So as New York opens, potentially you get a pull up into this fair value gap, respecting this bullish order block, which sends price lower down into these old lows here, into this 4 hour order block. All right. Pound currently respecting this 1 hour order block. This is my 4 hour order block that I told you that I would, I don't want to see it get violated. And by violated means a close above. It can wick up into here. There's relative equal highs right here, and there's a large imbalance on the sell side. Price could want to come up, grab Friday's high, reach into that, and then reverse. Ooh, there it is. I knew it was coming. I could feel it. I do not have a cold. I don't know what, just I had to sneeze. Massive run up, London. We're inside this 1 hour order block right here. We have a small fair value gap, relative equal highs here. There's liquidity up here, and there's massive liquidity up here. Anybody that was short from last week's run down probably has their stops tight above here. So I kind of like this area getting ran either today or tomorrow, and then roll over and target these relative equal lows down here on the pound dollar. So that's kind of what I'm watching and waiting for. Euro, same. People that are short from the move down last week, they probably have their stops up in here somewhere. And I don't know why I've got the sniffles. I'm sorry about that. I probably need to go blow my nose. Stops above here, stops above here, stops above here. You've got imbalances to fill in. It's currently respecting this 1 hour order block, but I could see potentially a run up, back up into this level. This is a 4 hour. This is going to be where your 4 hour order blocks are, up in here. All of this. So could potentially see a run up into here, maybe grab some of this liquidity, and then it rolls over. So if you're looking for an OTE from this leg down, you want to buy it in a premium. Your OTE lines up with this fair value gap and this order block up here, this lower end of this 4 hour order block. So kind of makes sense there to be looking for price to go a little bit higher on the euro and the pound both before it makes any more moves lower. And because I'm short, I don't want to counter trend trade. I don't want to, until I see something on this higher time frame showing me that it wants to move higher, I'm going to stay bearish. So we've had breaks of structure, we've had fair value gaps, and bearish order flow respected. Again, I know I'm repeating myself, but I want you to understand this is what trading is about. This is how you trade. You get your bias, you analyze the charts, and then you don't just randomly jump in and take trades. Oh, well, if it is going to go up higher, let's go ahead and ride that back up. Are there people that can do that? Yeah, and you're not one of them. And neither am I. I'm not going to do that. I don't want to do that. It's not high probability. It can reverse anywhere it wants now. If it's going to continue to respect bearish order flow, it is within the zone that it can just turn around anywhere it wants. It's filled in this fair value gap. It can turn around right now and start heading lower. I think it has a little bit more room on the upside to grab some liquidity if it wants to go lower. So I'm looking for the high of the week to be made tomorrow. Maybe today. We'll see. But I don't think, unless I see a, so here we are on a 15-minute time frame. You can see it's engineering liquidity. Grab some stops to run higher. This is a stop hunt right here. Bam, bam, stop hunt. All of this engineered liquidity overnight. London grabbed it, and now it's running higher. You have relative equal highs here. It's going to run these. I think it's going to reach up into here. I think this is your target for today or tomorrow. And then once it gets up here, I'm going to look for a confirmation that price is willing to roll over and head back down. And I will look for that on the 15-minute and the 5-minute time frame. And so as price reaches, so if we're going to come up here, where would we expect price to go? We could expect price to come back down under these lows, grab liquidity here, maybe at New York Open. Maybe at New York Open we see a drop into here. Something like this. And then you see a rally higher up into this old fair value gap, back down to this one, and then you see an ultimate run up above these highs. If not today, maybe tomorrow during London, you see a run into these highs or these highs up here. And then you're going to watch for confirmation to see break of structure, fair value gap, and get in on the way down on a fair value gap or high probability order block. And then you're going to target these lows, and we just need a 1 to 2, and we just need a couple of those. I'd like to get a couple of those this week. We'll see how it plays out. GU, same thing. Where might it come? If we're going to run higher and grab Friday's high and reach up into some of these imbalances up here, I would want to see New York come down, maybe down into this area, into this 15-minute order block, into these fair value gaps, and then run into here, make a new high, come back down, just respect bear or bullish order flow, eventually come up into here. And then that's kind of what we're going to watch and wait. It's probably going to meander around inside of this today, probably a little drop down, and then you're going to get a bump up into here, into this 4-hour order block. I would be surprised if Monday it makes an aggressive move all the way through there. It could. I would think maybe today we get this drop down, we end up closing up in here, and then Tuesday, tomorrow, we take out Friday's high, take out Monday's high, and then we start reversing throughout the rest of the week. So it's kind of my analysis there on the pound. Again, not taking any positions on this account right now. I don't want to get into a counter trend trade. Price can reverse at any time. It's not a high probability setup, and I'm not ready to say price has made the high of the week yet. I think it's not there. I don't think Monday is the high of the week. Probably Tuesday this week will be the high of the week. If we're going to remain bearish, Tuesday's probably the high of the week. Maybe Wednesday if it just meanders and consolidates, engineers liquidity. There will be a grab on Tuesday or Wednesday, and then price will reverse and continue bearish. All right, it is into the 8 o'clock hour, the New York 8 o'clock hour. In 30 minutes, the indices will get their first bump. If I'm looking at, this is my kind of line in the sand box up here. There's liquidity to grab up here. You have Friday's high in sights currently. So I would expect price potentially if it wants to go up before it wants to go down, and again, I'm bearish overall, so I'm going to wait, but you could see price come down into these, take out some of these overnight lows. So maybe price comes down into this area here. You get a Judas swing, and then you get something like this up into that 4-hour order block. And there's some buy-side liquidity that we noted earlier on the 4-hour time frame up in here. Maybe it wants to run that before it runs lower again. It's so choppy and nasty in here. It's just chopping everybody up. And so I'm going to wait for a pretty clear indication, a nice rejection of something, and a break of structure on a lower time frame before I would entertain more shorts right now on US30. This is kind of what I'm anticipating, though. Market open, could get a drop down, grab some sell side liquidity to run higher. It could also just run right up here today, stall out. We get a break of structure tomorrow, maybe a run above Friday's high and Monday's high, and then a drop. Just like Euro and Pound, very similar. They all move based on what's going on with dollar index. So dollar index is kind of the key barometer of us determining our bias. Anybody who is coming on here to watch this and you're like, I thought you were doing a 10K challenge. I am. And the goal is not to pass this in a day. The goal is not to pass this in a week. I can pass it in a week with 2% risk, 3 trades, and let's see, if I risk 2%, I have to make 8%. I'm down 2% currently. So if I win my next trade, I will be up 1%. If I win the next trade after that, I'd be up 5%. It's 2 winning trades in a row. And if I win the next trade after that, I pass. So 3 winning trades in a row would pass. And I can do that in 1 week. I have done that before in 1 week. But I've also only taken 1 trade in a week before. I am not trying to accumulate a lot of trades. I'm trying to accumulate a lot of wins. And because the beauty of Bespoke is that there is no time limit, there's a few no time limit firms out there right now. My Funded FX is one of them. They're a great firm, highly recommend them. But I'm doing Bespoke because they have a $2 million max allocation. Why would I go for a $300,000 max allocation when I can have 2 million? Same prices. Starting, if you just start with a 10K, basically the same price. Give me the $2 million max allocation. So that's what I'm going for. And it may take till the end of 2023. It may take the next 6 months to get there. But if I can even get close to it, my bank account is going to be just fine. The goal is to get a 10K account funded and then to use a withdrawal from that 10K account to purchase as large of an account as I can with whatever funds I get off of that. Keep the 10K account and keep trading it, but now you're trying to pass a large challenge. And then again, you just rinse and repeat. You take the funds that you get from the 10K and whatever new challenge you can pass and get funded with, you buy the next largest account. You try to keep all of those funded accounts as much as you can, and if you're trading them all the same, taking the same trades and your probabilities are playing out, then you should be okay. We should be able to do this in the next 6 months. Can you imagine 6 months from now having enough money in the bank and enough capital in your funded accounts that you could ditch your day job? 6 months. I sent out a tweet last night about just the insanity of our current cultural structure, of how we are taught and ingrained from almost birth, that you have to go to college and you have to spend 4 to 5 years in college and you have to go tens of thousands of dollars of debts. Most of us don't have the ability just to walk into college and write a check and pay cash for your education. Most of us are going to either work our way through or get student loans to pay for that education. And so you go in there and you spend all this time and effort and money, years and years studying and going into debt. You walk out, you graduate, good job, you got your bachelor's degree. And most jobs that you're gonna get when you get out of school, it's gonna take you 15 to 20 years to pay off your school loans. And we call that a wise decision. We call that smart. In the past, it probably was a wise decision. It was a good investment to go in. I'm not saying I would have done it. I'm not saying there's still some bad stuff about it. But in the past, number one, it wasn't as expensive. Number two, the likelihood you could get a good paying job and climb the ladder and increase your income to where it eventually cleared off all that debt and you were fine was a lot higher than it is right now. A lot higher. Right now, you're stuck. You are stuck and saddled with that massive debt when you come out of school, and that first job you're going to get is likely not going to put you in a position to pay that debt off and set you up for life. Like, we are taught we have to go get a job, work 40 to 50 hours a week for 40 to 50 years of our lives, and hopefully have enough saved up at the end, squandered away, that we can retire while we're dying. That's the American dream that we're pitched. And meanwhile, we have an opportunity right now. We have an opportunity right now with our trading careers in this golden age of prop firms and prop firm money to spend. Some people are going to spend 4 or 5 years, but you don't have to. You can spend months, several months, if not a couple years, learning how to do this business with very minimal investment. And then go get funded with a prop firm. Pursue max allocation with that prop firm and make 1 to 2% a month. 1 to 2% a month with a max allocated fund. For a couple hours a day, watching charts, pushing buttons. You're your own boss. No one is telling you where to be. No one is telling you what to do. No one's telling you how to use your time. And you have the financial independence to do whatever you want with your life. Which American dream do you want? If you're not pursuing max allocation with a prop firm, you're doing it wrong. All right. Enough of that. Here we come into dollars making a small little pullback here. It has traded not almost down to this imbalance, volume imbalance here, volume imbalance here. I would expect price to continue lower and maybe runs back up into some of this fair value gap here. You have on the 15-minute time frame, you have a 15-minute breaker block right here. This 15-minute breaker should be respected. I'm going to change the color. Just doing some live tape reading here on dollar analysis. This is a breaker. What is a breaker? A breaker is the last, a bearish breaker in this case would be you had a down close candle. We went lower so that we could run higher aggressively, take out a high that then aggressively runs back lower and breaks through that low, also with a fair value gap. This is a beautiful 15-minute breaker block right here. Doesn't mean it's going to hold. They often do hold, but that doesn't mean it will. See price trade back up into this fair value gap and trade back up into this breaker. Price, this breaker block will likely send price lower. You're going to see a run back up into some of these fair value gaps here, and then you're going to see price tumble back down lower as we head into the Monday open for New York. We'll see. That's my analysis. That is a breaker block. Dollar has made a new low. Euro has made a new high. Barely, but it has. And you can see my analysis playing out. I said back up here when the candle was here, we could see a run lower, which would coincide. This is a right here until price breaks above that. This would be a breaker on the euro side because you had a up move, down move, break of liquidity or grab of liquidity, stop run, up move, and if it closes back above this, this would turn into a bullish breaker on the 15-minute time frame. This is a order block here, just respecting bullish time, bullish order flow. You see price coming back up into this fair value gap. Tested it, ran away, traded through it, now coming back into it. It's in line with a breaker. It's in line with a fair value gap. It's in line with an inverted fair value gap. And I would expect price on the dollar to continue to weaken. You have a volume imbalance right here. You have a volume imbalance right here. You have, this is the old weekly low, or the weekly wick high. This was the old buy side liquidity that it ran up. Now you're seeing this trickle down, trickle, 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 trickle into a spot where it determines, okay, we're ready to stop trickling and we can now continue to move higher aggressively. So this 15-minute breaker is what I'm anticipating to send the dollar down into these levels down here. So we come up into this breaker, and then you're going to want to see price start doing this. Maybe into this area here. I could be wrong. We'll leave it there. If I'm wrong, I'll tweet it out and say, I was wrong. My analysis sucked today. You're not going to be right every time. You don't know. You're just anticipating. You're using your experience and how you've seen price react to different order flow and price deliveries. This is what I would anticipate happening right now. 8:15. I'll stay on for. I'll stay on for 15 more minutes here. I'll wait for the market to open. I want to see what US30 is going to do here as we come into the market open. I think we get a Judas swing lower, at least into this, maybe these lows here, before it tries to ride Friday's high. Man, I wish there were people watching this and leaving some chat messages. I'd rather chat with people in the chat than just talk to myself. But it's fine. It's all part of the process. Consistency, day in, day out. Be here. Do the same thing over and over. And you can follow along with me. This may not be super fun and exciting. I'm not sure what you were expecting. Trading, if trading shouldn't be fun and exciting, I think there are times that it can be, but I think overall, this is more what trading looks like. Professional trading looks like this. It's quiet, it's watching charts, scrolling Twitter, looking at what's going on in chat rooms. Trader Mike on Twitter says, look at it like this. You're in the business of decision making, not trading. One lousy decision, one impulse trade can ruin you, can set you back months if you're not careful. Couldn't agree with you more, Trader Mike. We are hunters. We are stalkers. And we are looking to take down trophy bucks. We're not looking to take down squirrels and rabbits. The more you try to hunt them, the more you're going to come up empty. We want to sit and be patient and wait and make wise decisions. Just getting itchy to trade is what screws so many traders up. So many traders. And it can absolutely ruin you. You can be so disciplined for weeks at a time and then be so itchy on wanting to get in and make a move and let that one stupid decision ruin your weeks of growth. Don't do it. It's not worth it. It's not worth it. Dollar reacting off of that bearish breaker block as anticipated. Pound, as the dollar's dropping, is also probably going to run higher here. Could potentially see a move on the pound back down into this range. If you can get a break of structure and this 4-hour order block wants to hold on the pound. If we look down here on the 5-minute time frame, if we get some displacement down and a heavy break of structure, and then I see an order block respected and another break of structure for confirmation, then I would be looking for a short today on the pound dollar to come down and sweep this low and eventually these lows. But I would need to see a significant break of structure here, a return to the fair value gap and a rejection of that structure to come back down, and then I would be looking for an entry. I don't know that we're going to get that today. I think the dollar is going to want to come down lower into some of these volume imbalances and retest that wick from buy side liquidity, I think. I don't know. It doesn't have to. We're in this breaker block right here. It's holding it down on the dollar. And for the pound to do what I just described, the dollar would need to disrespect this order block, create a new high, respect it, and continue up here on the 5-minute time frame, which is as low as I go looking for entries and confirmations. I really like the 15-minute. The overall is bearish. So we've had this run up Monday all the way through London. So There's some relative equal highs up here. I think we're going to reach up and grab those before we head lower, but it could New York could just be like, nope, screw London, we're reversing. This could be a reversal day for the New York session, and we get some displacement down and we start heading lower again. This would be the, I don't use this as an official trade pattern. It's an ICT called the market maker sell or buy model, MMXM. Market maker SM is sell model, BM buy model, and this would be the curve, your teacup, whatever you want to call it. It's like it's coming back up to grab some liquidity up here. That's why I think it's probably going to run up there, and then it's going to go into a sell model. And the sell model, this is going to curve down and target sell side liquidity over here. And so that's the move we want to capture and wait for. And we don't have to get the first break of structure. Very rarely, like I just don't want to get in there. I want to wait for confirmation. I want to wait for confirmation. We've got about 5 minutes till the market opens here in New York for indices. And starts coming online as anticipated. You get your Judas swing. I think it's going to take out some liquidity before it heads back up. So we wait. Sorry, answering a couple messages here. So I would anticipate here on the US30 for price to come down, clearing out this liquidity and this liquidity. If it's going to make a run for Friday's high, this is where it's going to want to reach to aggressively. And so you might be able to find a short-term buy opportunity here if we can get a break of structure. So our liquidity grab, quick deep dive displacement, quick deep and more quick displacement back up, and then you're looking for break of structure with a fair value gap or order block to enter to go long. It would be a very short-term buy. I'm not telling you to do that. This is my anticipation of what price is reaching for right now. Dollar's just kind of stalling out. Pound dropping down lower. Again, if it's going to want to run higher, it's probably going to want to grab some liquidity in here before it does that. And euro modeling, the dollar just not doing very much, just in this consolidation, waiting for the New York open to come. US30 dropping, NAS dropping, and has grabbed sell side liquidity here. S&P has grabbed sell side liquidity there, and the US30, it's grabbed some, not the same depth as the others. So if that's your Judas, coming into 2 minutes into the market open, this was the low I was looking at, 610 on, yeah, 610. There's 610 there, took out that low, and US30's 610 was right here, and it's taking out that low. So all of the indices are moving together currently. Keep dropping lower to grab some liquidity. Again, some stops, some engineered liquidity on these lower term time frames. Probably going to grab that and then reverse up to try to take out Friday's highs, at least on the US30. Pound holding steady. Dollar should be dropping a little bit. Yep. 15-minute order block or breaker block is currently holding as anticipated. about 5 seconds here and get the 8:30 market open on the indices. We've opened. We'll see what happens. We're still in this overall little range right here. So we've consolidated. We've got buy side liquidity here. We've got sell side liquidity here. Inside of this range, we've just been dealing this small little dealing range right here. It's where your short-term lows and highs are, and you would be anticipating a run on one side or the other. It looks like it's going to want to run those lower first. Aggressively down now. NAS shot up and it's coming back down. S&P just shooting down lower, running sell side liquidity. Still some good buy side liquidity up here, so I'd be anticipating somewhere in here for price to start reversing if it wants to go higher. Dollar. What did I tell you? What did I freaking tell you? Market open, gaps up on the New York open. So now you have this big gap on the euro, on the pound, and the dollar has dropped precipitously. Bearish breaker is holding just perfectly, absolutely perfectly. This again is in line with my anticipation for taking out these highs on the pound, eventually running these highs. Maybe today, if not, maybe tomorrow night over London. Probably going to want to fill this gap in at some point. That's going to be either today or tomorrow, which would be a nice target. Yeah, US30 grabbing liquidity, NAS grabbing liquidity, S&P grabbing liquidity. With the dollar dropping so hard, you would expect US30 now to start running back up and start targeting some of those highs. I am going to use this on my May competition account. And I'm going to try to capture a little swing up here. On the US30. This is not on the 10K challenge. I'm just telling you, this is why I like these competition accounts, because you can try out different things and get into positions that don't affect your regular trading accounts. I got in right here. And I would be targeting up here. Friday's high, this order block, 1 hour and 4 hour is what I would be targeting on this move up. Grab some liquidity. So I'll be looking for 33,559. Let's just call it 50. And I don't really put stops on these competition accounts. I just monitor it, and when it gets down close to my daily loss limit, I would close it before violating it. My guess is it would be somewhere down here. I don't know. We'll see how that plays out. Judas swing. I'm anticipating this to be the Judas swing for the day. On the indices, it's grabbed and taken out liquidity on the 15-minute time frame, it has dropped into not a full discount, but it's dropped out of this range. It engineered liquidity, market opens, grabs liquidity, and then I would anticipate a run on this buy side liquidity up into this order block. That's the way I'm thinking about this demo trade on a competition account for my funded FX. That's what I'm looking for there. All right, let's go back, look at the dollar. Dollar is, if the dollar's dropping, typically your indices are going to be going up. NAS is trying to climb up. S&P still on the downside a little bit, but it's dropped into these fair value gaps. Take this off. I would be targeting buy side liquidity at this level and these levels up here. Pound is flying higher as anticipated. Euro rejecting a little bit, but pound is definitely stronger. And of the two, it has now reached up into these relative equal highs and into this fair value gap and taken that liquidity there. This 4-hour order block, again, we're anticipating this 4-hour order block to hold and not have a body closure above. I would expect some type of wicks up into here. I don't really want to see, yeah, we'll just wait and see. If this gets violated and hold, this would become a breaker where you have an up move, a down move, take out liquidity, and then it breaks with a fair value gap. Then you would expect it to reverse and become support to then run up higher into this weekly imbalance up there. But big jump on the New York Open. The indices are wanting to show weakness. Pulling back into OTEs for London, so we're approaching 50% discount area here on the S&P. NAS is not as weak. US30 is weaker. Again, this is a 15-minute order block right here. You have a fair value gap below it. Where is the London? So this was the London. So we're approaching the London lows here. This is your new week opening gap down here. This could be a draw. S&P still showing weakness. NAS now starting to roll over as well. US30 rolling over. Is this a Judas swing? We don't know yet. We don't know yet. Taking out all the liquidity built up overnight. And taking out London. This was the London Open right here and reached right back down to it. The dollar is rallying off that wick test of last week's buy side liquidity. This is an old week, top of a wick. You can see price rallying back up off of that. It has broken structure here. If in the next 30 seconds it's going to leave an imbalance here, so you could potentially see the dollar rally back up into this fair value gap before it wants to drop lower. Euro coming back down to fill in this gap that it left at the New York Open. It means the dollar is rising with the euros dropping. and it looks like it's going to almost fill that in. Dollar hasn't come up as aggressively. The euro is just trying to catch up a little bit here. Okay, euro has filled in its volume imbalance. And continues to drop lower. Dollar's rising. Again, this is the imbalance. We've had a break of structure. The breaker block shot us lower. We've had another break of structure on the 5-minute, and now you're inside this fair value gap on the dollar. If you look at the 15-minute time frame, get a little clearer picture. The breaker sent us lower, grabbed into a discount into these volume imbalances here and here, filling in wick test of last week's buy side liquidity. Is that going to provide the support that we need to have a strong bullish dollar? Is it going to be today? I don't know. If it is, then the indices will not have a fun day today. If that is the indeed that is the test. If that's the test. Didn't quite get down and fill this gap in on the 1 hour. Didn't reach this 1 hour order block here. But you can see this beautiful retracement. This leg up. Look at the OTE right here. Optimal trade entry. Right there. Is the pound going to respect this 4 hour order block? Time will tell. Euro is definitely showing weakness and rejection off of these old fair value gaps and off of this 1 hour order block. Filled in this imbalance, rejected off of this 1 hour order block. So what do we get? Till we get a break of structure here and some displacement above, I would not think the dollar is going. This breaker block and in this area here, there's obviously some liquidity up here now. But I would anticipate if the dollar is going to remain bearish, it would respect this fair value gap off of this displacement. If it breaks through here with displacement, then we can then start looking at the highs. All right, y'all. It is 7:45 almost. I am been on for a while now. Quite a while. 113 minutes. So I am going to go and get on with the rest of my day. I will be posting stuff on Twitter, trying to grab some screenshots here and throw them up there and give some commentary on how things are playing out. I've given my analysis, so we'll see how accurate that is and how that plays out for the rest of this morning. I don't like saying like Monday analysis is probably the least accurate analysis that any trader can give, because the market is just opening for the week. And so we're looking to capture some weekly expansion and find setups in line with the weekly expansion. And often that does not happen on Monday. Monday is just the setup for the rest of the week. So I've given you what I think and my best analysis on the way it's actually playing out right now. That doesn't mean it will happen on Monday. So we'll just watch and see. So you can see this is what I said for dollar for today. This is what I said for pound for today, euro for today, and US30 for today. This is just a demo trade. on a competition account. This is not part of the 10K to max funding challenge. So no trades today. I don't think I'm going to take any. We'll just come back. I'll look at charts again tonight. I will be back here every day this week at 7 a.m. New York time. And we'll just read the charts together and see what happens. See if we can get this 10K challenge back above and back on track, back above break even. So thanks for watching, and I'll catch you guys on Twitter at Venator Trading on Twitter. Follow along there, subscribe, like, turn on notifications, all those things. So but I'm so glad that you guys that we're here for a little bit. Thanks for tuning in, and we